It's the first large example we have of a company that got marked that high and now is going to go public that low. That being said, the investors who invested at 39 billion were sophisticated, some of the most sophisticated investors in the world. I'm sure they made money on tons of other deals. I think it's actually good for public market investors, the small guy, to get a chance to get in at this valuation.
Welcome to the Rideshare Guy podcast, where you will learn about the rideshare and mobility industry, straight from Harry Campbell, who's got over 5 years experience covering the industry and has talked to thousands of drivers. There's no better place to stay up to date, entertained, and educated. So let's dive in.
Emil Michael is an investor and strategic advisor to many of the world's most important high-growth companies. He's currently serving as chairman and CEO of DPCM Capital. Emil was the former chief business officer at Uber, where he led the company through a period of exponential growth. Across his many tech leadership roles, Emil has been instrumental in raising over $25 billion in capital and the creation of $100 billion in market value for technology businesses. You don't even really need an intro, Emil, but I'll give you one anyways. How are you doing today?
I'm doing great. Good to see you again.
Yeah, I know. We were just chatting off air how I feel like I just had you on the podcast, but it was actually about a year ago. So appreciate you coming on, and maybe we'll make it a regular yearly thing.
That sounds good. Well, I'm sure we'll have something to talk about at least once a year.
Yeah, that's about as much as people can handle me anyways.
Yeah,
so appreciate you coming on. And so you had this tweet recently where you sort of took a quick dive into Instacart's S1, and they're sort of getting ready to go on their roadshow and IPO. And obviously Instacart is a huge company. You know, they've had, I think they're also, what's interesting is they're broadly appealing right now to a lot of investors because they're sort of this first crop of, you know, kind of IPO companies after the market has had some turbulence. So really excited to dig in. And, you know, I'm going to link to your tweet. You shared a few images from the S1. We'll dig into it right now. But, you know, at a high level, when you read through Instacart's S1, and you may be one of the few people who actually, it sounds like, read through it, right? A lot of people just tweet about it. What was like the first thing that stood out to you about Instacart's S1?
So one good, one bad. On the good side, the core revenue growth, which is essentially the fee that Instacart gets after they pay the grocer, right? So it's not gross revenue, it's net revenue, is growing pretty fast. So that was about, I think, 31% year over year, which is higher growth rate than Uber's got sort of overall. And their advertising revenue growth is also sort of in the 30s. So those are two really good things. What I thought was bad and kind of odd is that their gross revenue and number of orders is flat.
Yeah.
Right. So you have this flat top line, but a growing revenue and advertising stream. That means they're either getting better take rates or they're doing something with what's effectively a take rate to increase their proportion of the revenue that they keep. And they're adding more ads onto the platform. So maybe they had inventory that wasn't being as used as well. So those are the good and bad first things that jumped out.
Got it. And I mean, I guess it also means that, you know, traditionally, right, grocery, I think one of the things people like about it is you have a high average order value, right? And especially we know groceries have gotten very expensive over the past year. So I think I saw it was over $100 for the average order value. But I guess that number is also not necessarily increasing, right? Because that top line kind of gross revenue, right? That would be sort of the top line gross revenue. If that is going up, and as a customer, I'm spending more and more, that's kind of what you would want to see, right? But that's not really happening.
Well, you know, if you dig in like one or two levels down, what you see is that regular customers are ordering more from Instacart. I think they showed something about after 6 years, they're still retaining a huge number of customers. Customers are doing 4 or 5 orders a month plus $100 per basket. But it's what's missing is new customers coming on and doing the $100, $200 a month kind of orders. And that's what's odd. So they're taking their existing customers and monetizing them better. Yeah. But not a lot of new, it seems.
Well, does that make sense? I mean, if you think about Uber, DoorDash, Instacart, everybody knows the name of these companies by now. Like who hasn't heard of them by now? Like, do you think there is still much growth for new customers? Like if you haven't tried it by now, are you going to try it in 3 years?
I think that I'm not sure it's as much about brand as much about household income.
Got it.
So if you're a family and you're okay paying the fees and the delivery and all the things that any of these companies add on to the core bill, eventually you're going to run, you're going to run out of cohorts of people who can afford it, or people say like, you know what, I'm doing such a big order, I'm just going to go to the supermarket. I'm not going to spend 20, 30 bucks on the collection of fees. I'm just going to go. So what I worry about is maybe they're at the top. They've saturated the economic category of people who can afford this on a weekly basis. That's a little different than transportation and a little different than hot food.
Got it. What do you think about the kind of product itself, about grocery picking and delivering for someone? Like, do you think there are any challenges that, hey, I don't want someone picking out fruit or veggies, or, kind of like just like from a product perspective, like, oh, I don't want that?
I think that when I don't know how early an Instacart user you were, but I was like first because I was a bachelor, and there was like the notion of going to a supermarket when I was working at Uber doing it.
I hate to break this to you. I think you use it more once you have kids, not gonna lie.
Yeah, no, you're right. But yeah, I started really early, and I thought that would be the thing. It's like, oh, you want to squeeze the tomato or smell the cantaloupe. I think that has become less of an issue than the out of stock items. The fact that Instacart generally doesn't know what's on the shelf.
Yeah.
So you have this substitution thing. And if you're not on your phone while the shopper's shopping, you may end up with stuff you didn't want. Now, as a family man, Harry, that you get the wrong type of yogurt for your kid or whatever, it's a capital case. So I think that particular problem is outweighed I want to feel and touch the item itself.
Got it. So you think the sort of out of stock items and the sort of, and this is one thing that's important, and we educate a lot of shoppers on for Instacart too, is that, hey, like staying in constant communication, right? Because your tip is actually dependent on the order value as a shopper, right? So you don't want them to not want a $10 item, because then if you have a 15%, you just lost $1.50. You're kind of incentivized to replace that. And obviously, but you also want to replace it with something they want. So, I guess like that out of stock problem, I don't know if that's going away anytime, but would you see that as sort of the biggest downside to the product or the service itself?
So if I were to say, what are the inhibitors to growth? Number one, overall total price and cost, right? When you include tip and all that. Number two, the uncertainty that you're going to get what you want relative to going into the store. Because when you go into the grocery store, you get what you want.
Get exactly what you want. Right.
Exactly what you want. And that's a benefit of the GoPuff model, where they know exactly what's in the warehouse, and their inventory systems are connected. So is there a way that Instacart could integrate with the grocery store inventory system? Sure. I'm not sure the grocery store wants that. And maybe that's a strategic sort of issue. But that, I think, is the number two issue that I'd be trying to solve if I were the CEO.
Got it. No, I like that. And I remember this really stood out to me. I've been looking at the grocery space a lot the past few years with the huge growth. We had Erewhon's Chief Revenue Officer, Kabir Jain, at our conference, Herbivore, last year, and he was on stage. And I remember one thing he said is like, the dirty secret in grocery is that we have no idea what the inventory is. Like even the grocers themselves, like don't know, what the stock shelves look like. So when you go on Instacart and it says, this item might be running low, it's like, imagine they're not even the source, right? They're like the second party that has access to it. So yeah, I don't know if that's going away anytime soon. And you mentioned GoPuff. I was going to ask you about vertical integration. So let's put a pin in that for now. The other thing that stood out to me and I wanted to ask you about was this $570 million in advertising. Like that seems very impressive. What do you think about that?
I think it is impressive. And I think we're seeing this. I'm surprised by the advertising revenue that Uber's seeing. I'm surprised sort of by the advertising revenue over the last few years that Amazon's seeing. So it's the rise of the advertising revenues in e-commerce companies that's sort of overall surprising. And if you look at the size of these revenues, Harry, from advertising, they're essentially what the profit is. So it's sort of like running Rideshare and Uber Eats for break even and then making a bunch of money on the ads. And same with Instacart. It's impressive. But you know what makes sense about grocery advertising is the whole grocery model is built on it, like slotting fees. Where do you put the Coca-Cola? What's on the front of the aisle? What's discounted? The supermarket themselves make a lot of money from the brands on this type of things. Now, Instacart's just bringing some of that money to themselves.
Yeah. Do you think that there's any kind of unique, I guess, unlocks in the Instacart and kind of grocery model that might work. On Uber, for example, it's like you're waiting for a ride, they show you an ad. I don't know. It's obviously valuable, but like how good of a fit is that versus, when I search for pasta sauce, like, I don't know, maybe I normally go for Prego, but they put some new one in front of me and it's on discount or a coupon. Like that seems more effective. So just from like an advertising effectiveness, it seems like they have that going for them.
Oh yeah, it's the next level. I mean,
Mm-hmm.
if you're in an Uber and you're looking at an ad for the NBA season pass,
Yeah.
right, that may or may not be relevant to you at all. But Instacart, you can actually go from seeing that ad to purchase it like right there,
Mm-hmm.
and it'll be at your house in 2 hours or whatever. And if it's smart, it's looking at your search history and your previous baskets and telling you what you want. So it's hugely valuable. And frankly, free samples. Like, why don't you just try this for free now? Right? Did you like it when you come back onto the app? Did you buy it? Did the ad work so that you become a customer of that product for years to come? And there's a lot of good data in there in the advertising mix for Instacart.
Got it. So what do you see? How do you look at Instacart's growth prospects then? If it's sort of flattening out on new customers, like do they need to come up with some, big, hairy, audacious new thing? Or is it just going to be kind of slow and steady from here on out?
So I think Fiji, who's the CEO, who has an advertising background.
Yeah.
My guess is she takes what they've built and continues to tune that to do exactly the things you said, Harry. Make these valuable, more actionable. So I think there's a lot more money to be had in the advertising piece. And a lot of sort of growth and in profits will come from there. In terms of the overall growth, there has to be a way to figure out this price inventory issue to get to the next set of consumers and not just the sort of early, upper middle class and above early adopters. And that could be batching. It could be, on Amazon, when you subscribe and save, is there a subscribe and save for your core staples where it just comes, and they could tell the supermarket ahead of time, make sure you have these items, and there's more data cooperation with the grocers so that it becomes more of a regular habit, and they could charge less because if it's subscribe and save, they know when they're bringing it to you, and the batching is a lot easier.
This is like free consulting right now for Instacart's team. But I also really like that. I mean, one thing I've sort of made my money off over the years is really just looking at these adjacent industries like subscribe and save, like Amazon. How much energy, money, resources do you think they've spent on that? Just go and kind of rip that off basically, right? And have no shame. I like the batching idea. What about vertical integration, the GoPuff model, right? Like, I mean, when I go to shop at Instacart, like, and I order milk, I don't care what brand it is. I don't care who it comes from. Like, I just want the milk, the 2% milk. So do you think there's opportunity to make money from vertical integration, like with the Instacart model, or is it too many moving pieces?
I think the difficulty with the vertical model for Instacart is that they're going to tick off their biggest and most important partners, right? So if you have Albertsons or Safeway and you say, hey, by the way, I'm going to sell milk and eggs out of my own warehouse and make the full margin myself, they're going to be none too happy about that. Now, that being said, it may be something they have to do in the very, very long term, but I don't think that's something they'll do in the near term because of the partnership risk that they bear with that.
Yeah, I think one sort of crazy idea to round out this thought was kind of a major product change where, kind of building off of that, maybe less vertical integration, but, more batching, right? If you kind of right now you go and you select the store, if you could go and just select the items you want, and then they figure out, from one or two stores, or, maybe they add some items of their own. You're right. There would be some risk pissing off the partners, but that was another idea I had when thinking about this.
Yeah, it's just in that thing, if you're going, and you know this because you know logistics, Harry, you go to more than one hop for anything, the cost of the human piece of that could overwhelm.
I was sort of thinking it kind of has to be maybe two, and that's kind of what I like. So a lot of executives in the food delivery space, they love the word batching. I hate batching in the context of food delivery because the product is literally deteriorating with every second, the longer it takes, right? If you Uber pool, you still get 100% of your destination if you batch a rider, right? You're not like getting dropped off around the corner and have to walk an extra feet, although they have tried that product. But, with grocery, right, it's sort of like not time sensitive, right? You want it sooner rather than later, but you don't need your groceries always in 5, 10, 20 minutes, right? And that's why they have all the different options. And so I think that batching model within reason, 1 or 2 stops could work well. So I feel like that could be an opportunity that they could actually lean into and would be a good product, customer, user experience.
Yeah, I remember this. It's easier to keep things cold than it is hot, right? So
Mm,
you're buying ice cream from Instacart. They
interesting.
could have a cold pack.
Yeah, I haven't heard that
Um,
before. I like that.
so so you just have to keep the ice cream from melting, right? That's the
Yeah.
goal. You're buying an Instacart thing. So if you did 2 stops and it took you an extra 20 minutes, so long as it was in sort of something that kept it cold, you're fine. And the
Hmm.
customer's fine. Bananas don't matter. Cereal doesn't matter. Most of these things don't matter. Hot food, that deteriorates very quickly.
Yeah.
What are you going to have, an oven in the back? And then it changes the flavor of the
Yeah.
food and the crunchiness. And it has a lot more impact on hot than it does cold.
Very cool. Anything else stand out to you from the S1?
What stood out, the other thing that stood out to me was that two of their big bets were odd to me. One was called Instacart Health,
Mm.
something to that effect,
Hmm.
where they're going to try to convince employers to sort of, I think, subsidize groceries so long as those groceries are healthier.
Mm.
That sounds like a zero interest rate environment idea.
Got it.
Because forget the Ozempic and that
Yeah.
whole trend on what that's going to do to sort of food consumption. But I can't imagine employers wanting to subsidize groceries and then determine here's the only groceries you could buy. It's just sort of an
Yeah.
odd thing. And then the smart cart thing, they bought a smart cart company,
Yep.
which also not sure how that fits into the core business that
Yeah.
much. So I don't know. You asked a question earlier, what are the other growth factors? There might not be other adjacencies. It might just be
Hmm.
doing what they do a lot better and more efficiently.
Yeah, actually, when I was at CES in January, I met the founder of that smart card company that they had acquired, and they were sort of demoing the technology. And again, I sort of, I see some potential there, but and kind of like building off of your Uber experience, right? Obviously, with Uber and Uber Eats, and then the company, kind of went and, got all of these stakes in other ride hail companies and was doing freight and self driving cars. Then Dara came in and kind of started divesting all of them. Like, I know we've chatted about that strategy in the past, but what do you think for Instacart? Like, should they just say, hey, let's just cut out all the crap and just focus on our core business, like get good with ads, like kind of the things we mentioned?
So price, inventory, ads, those are the three
Price,
things I do on the
inventory,
current,
ads.
right? And then outside the US, right? One of
Mm,
the
yeah.
things that they haven't done, they've sort of been more Lyft-like than Uber-like in their global ambitions. And I don't know what's out there as much. We know that DoorDash bought Wolt, which
Mm-hmm.
is in Europe, which is much more of a grocery player than a hot food
Yeah.
delivery player. So what are those other opportunities? Now, there's not a ton of synergy, right? Because you still
Mm-hmm.
have to acquire customers, build a
Yeah.
brand, hire delivery drivers, and so on. But
And
maybe
you're not
there's
ordering
synergy.
groceries, when you travel, right?
Yeah,
Like you would
right.
with
Yeah,
an
yeah,
Uber.
right. It's like Airbnb, you recognize the
Yeah.
brand and, it doesn't have those network effects. But it might be that the software is applicable to
Mm,
grocers all over the place if they could figure out that challenge. But there's, the other way to think about it, Harry, and I haven't fully formed thoughts on this yet, but we know that DoorDash and Uber are going into grocery. What
yeah.
does that do to Instacart? And is there a retort to do hot food delivery?
Mm-hmm.
And you're like,
Oh,
well,
interesting.
that doesn't quite make sense. You're like, okay, well then why is DoorDash and Uber doing grocery delivery? It doesn't quite make sense. If you need shoppers for Instacart, not
Mm-hmm.
just pickup and delivery people. I think Uber and DoorDash are doing it because we just want your share of wallets,
Yeah.
right? So does Instacart have a share of wallet play? And they do have the biggest basket of the three of them. So can they use that
Right.
as a way to get more of your share of wallet? And what does that look like? That's something I'm thinking
Mm.
about. I don't have bright ideas just yet on it, but it's something to watch in the coming 12, 18 months.
Got it. Well, you brought up competition, and this was probably the question I was most excited to ask you about. And do you know why?
No.
Okay, so in our last podcast, obviously we talked a lot about, how Uber and with Uber Eats was the market share leader and they ended up
Yeah.
losing out to DoorDash. And I know you have a lot of thoughts, so people can go listen to that. We won't rehash that, but imagine you're in charge of Instacart right now, and there is a lot of competition, right? I mean, Amazon and Walmart are making big pushes into the grocery and delivery space, especially Walmart. They've got all these sort of local delivery products and white label and their own Spark drivers. You have DoorDash and Uber Eats. So I feel like, and even GoPuff, right? I mean, there's, would be, I think, in that same category. So right now, I feel like Instacart's pretty clearly on top in the grocery space. What do they need to do to stay on top?
So a couple things. I think the Walmart grocery customer is somewhat different now than the Instacart customer. And actually, I think back to the price point, Instacart has to move toward the Walmart customer if they want to grow.
Got it.
And the Walmart customer, remember, the selection of what you buy at Walmart is not like Erewhon or, it's sort of bulk purchase, very good price. I don't know what they're going to charge for delivery or, how they're going to do that. And Walmarts are not densely in urban areas where
they're typically more suburban, less in the city.
Right. So I think there's room to go before they clash, those two. Amazon has tried grocery delivery 5 times and not succeeded a single time. I don't know why, but
they're going to keep trying just every few years.
I mean, look at Whole Foods, though. It's sort of a disaster, right? So they've spent a lot of money, like using their own stores, using warehouses, all kinds of things. It was called Amazon Fresh, I think, at one point.
Yep.
So Amazon, I'm less worried about. Walmart will be a threat over time, but that would be good because that means Instacart's moving toward the average consumer and away from sort of this upper middle class and above consumer, which means they've been able to figure out some of the cost equations and get more advertising revenue. As it relates to DoorDash and Uber, they're going to fight for grocers. I bet, without knowing, that there's a war going on right now. Every time one of these contracts come up for renewal with Albertsons or Safeway or whatever, all 3 companies are bidding on it.
Yeah.
And what's interesting to me is I'm sure DoorDash and Uber will willing to pay money or do whatever it takes to get those customers, but then Instacart has the experience. They have sort of probably more software. They're probably well towards solving this inventory problem more than the other companies. So it might end up being a little bit territorial where one chain is partnered with this company and the others. And I would do everything I can if I'm Instacart to win every one of those deals. Those are the existential ones. You have one of them go away, you're talking about a loss of revenue. Forget growing revenue.
Got it. I mean, I will say, I know that there's a lot of competition and I've heard that, in the grocery space, right, everyone kind of wants this exclusive relationship with a grocer, if you're Instacart or Uber. I mean, sort of similar with food, right? Like obviously there are some chains that are only on Uber Eats or only on DoorDash now, and then some that are on all of them. But I guess one thing that's interesting from the courier side is that, food delivery, I call it like dummy proof. You literally go pick up an order and drop it off. Like it's pretty hard to screw up. It's possible, but it's pretty hard to screw up. Shopping for Instacart is like a whole nother ball game, right? We already talked about the out of stock and the items, and I just did a video for new Instacart shoppers for one of the top pages on our website. They'll probably be seen by hundreds of thousands of people. And my number one advice is like start at a store that you know well. So you know where the items are, so you can shop quickly. It's like a different job than food delivery. Do you think that gives Instacart do you think that would sell an Albertsons or a Ralph's, or do you think it's just more of like an internal, hey, we know we have this going for us and our experience and product will be better and that'll show up in the metrics?
No, I think it matters. I think Instacart, if I were CEO of Instacart and I went in to meet the CEO of one of these grocery stores, I said, look, we've been doing this for a long time. We have a training program and we have software that each one of these shoppers walk around and quickly and efficiently get through your aisles and communicate with the customer, and they get out. So your store is not clogged. Do you really want someone without software running around the store, not knowing, asking your workers, where's this or that?
Yeah.
Because we've solved that problem.
Bugging your workers too, taking time from them. And, one thing I have noticed from both the shopper and the customer side on Instacart, it seems like they're kind of leaps and bounds ahead on the product side, integrating AI where, if you're a shopper and an item is out of stock, it prompts you, you can sort of quickly select like, hey, tell the customer this item is out and ask them if they'd like a replacement and then send them a picture of all the options, right? And they're kind of like leaps and bounds ahead, I think, of their competitors. So I do think they have a pretty big leg up there. What about GoPuff? Last one on competition. And are you still involved with the company or?
Yes, I'm very involved. I'm on the board, actually. The company's doing great. It's
last man standing, huh?
I think, yes, certainly in the US and probably in Europe, there'll be the sort of the major company that survives. They have a big cash balance. They've, just like most companies, have gotten their costs into a more rational place given the economic environment. They have a huge moat on liquor and beer sales because you need licenses that are
Right.
very different in every state in the country, and sometimes every city in the country. And they have good partnerships with Uber and with other brands, and their advertising revenue is pumping, growing. So they will, look at how the Instacart IPO does, and that'll sort of be an indicator of sort of, how GoPuff's doing from a market value standpoint, but they're doing very well.
Got it. Do you think GoPuff and Instacart are kind of direct competitors, or how do you see them? And I like your Walmart and Instacart analogy. Like, where does GoPuff fit into that billboard or scoreboard?
GoPuff is more about instant needs, right? When you want something from them, it's closer to Uber it's like on demand, I need it now. But one of the reasons, and I'll give this analogy, that I think Uber makes mistakes by putting rental cars and all this other stuff on their app is you don't open the Uber app saying, let me plan a trip for 2 weeks from now with a rental car.
Yeah.
You usually open it saying, I want food now. I want to ride now, right? Maybe you do the scheduled rides to the airport. That'd be the one exception, but it still fits in the rides category. When you open the GoPuff app, you want something now. You're having a barbecue and you need some stuff now. So their differentiation is not the 2-hour wait. And it's also the selection that you get from GoPuff are the kind of things you want now. Whether it's liquor or beer, whether it's, iPhone chargers, whether it's, products because you're sick, cold medicine, all the things. They had a flu pack or that COVID pack during a couple of years ago. So you sort of got the collection of stuff and it delivered to you in 30 minutes. Like, wow, that's awesome. So it's sort of much more about instant needs and gratification than Instagram. Now, is there overlap? Sure. Can you get some of the stuff in both places? Absolutely. But one's instant, one isn't. One has targeted menu selection, one doesn't. That targeted menu selection is more valuable advertising, I think, than Instacart. Right?
Gotcha. Yeah. I mean, obviously the sort of price sensitivity, when you need something now, you're willing to pay a hell of a lot for it. When you need to get home, you'll pay whatever it takes. When you need cold medicine, you'll pay a nice premium there. So interesting, and appreciate you sharing that. So, with the last few minutes of the podcast, I kind of want to shift gears a little and sort of talk about the roadshow that Instacart is about to go on. And, maybe even again, I might put you in the shoes if you were to be CEO, since you've got some, kind of experience with the roadshow and raising money. But first, before we get into that, I mean, what do you think about the grocery business? Structurally, is it a good business? Does it matter? Like, how do you think about it, kind of as a business, and then maybe even compared to, maybe food delivery or ride hail?
So a lot of people say, without thinking through too much, the sort of core structure of the grocery business, and they're like, it's a low margin business. It sucks.
Yeah.
And well, there's a lot of 20, 30, $50 billion companies who are grocery companies. So it may not be that bad. It must not be that bad.
Yeah.
Right. And it might be because people are looking at the margins on food and not understanding that even in a physical supermarket, slotting fees.
Yeah.
How the other money flows into the system.
Yeah.
And it's not like these supermarkets are shutting down. They're popping up, so there's expansion happening. So I don't think the category is going away. It's obviously from a household budget standpoint. You have housing cost, transportation cost, food. It's one of the 3 biggest costs of, a household in America and the world. So it's not going away. It's big, and I don't think these groceries are as bad as business as people think. Now, Instacart obviously bolts onto the existing grocery structure, and it provides convenience for families or for busy people for who the economic proposition may be paying more outweighs the cost of the visit. And I think that value proposition needs to get more toward, if it feels like it costs the same because I could do more ads, I'm going to get a whole nother set of customers. Yeah. So if I were on the roadshow, I'd answer the question before asked, because you're going to get asked, why is the top line not growing? Why are you not getting new orders? And you have to say, here's what I think happened, and here's what I think the future is. And here's how we're going to get to a product that's closer toward where Walmart grocery is, while increasing revenue from advertising. And that's the mix. And here's the ways to see if that's happening in the next couple of quarters.
Yeah, it's sort of funny. Once you started explaining, I was like, wow, that was kind of a shitty question I asked. Like, obviously, people need food, right? Like, grocery is like a category, housing, transportation, food. But I do think there is this common, refrain, like low margin business, right? But I guess, like, my point though is like, who cares? It doesn't matter, right? If it's like a break even business, but then you can make billions of dollars off of advertising, like, that's a great business, right?
Yeah. I mean, I didn't take it the way you said it. I took it to mean like, is this a good business to
Yeah.
be in?
Yeah.
And I think obviously investors in public markets value Albertsons and these companies very highly. So I think it's a lazy answer to say it's a low margin business that
Yeah.
sucks.
Yeah.
I think the more sophisticated answer is there may be parts of it that are low margin that drive other high margin bits. And we're
Yeah.
now seeing that in
Yeah.
Uber, at Instacart, where these advertising revenue streams are really coming in. Frankly, this is going to hurt Lyft. They don't have
Yeah.
enough volume on ads, enough product breadth to make advertising a big part of their business.
Got it. So let's, what I was really excited to talk to you about is this roadshow, right? So help me understand. Like, I see these articles, Instacart getting ready. I think they're getting ready to go on what's called a roadshow. Like, first of all, what is this roadshow, and like what's happening behind the scenes? Like, Instacart is going to go. They've got some valuation that was really high from when they last raised money, and I know it's been cut a bunch of times. But like, what's happening, like mechanically, nuts and bolts behind the scenes, like when this company is preparing to IPO?
Yeah. So what happens in a roadshow? So they filed their S1 with SEC.
And that's basically saying, hey, we want to go public.
Yes,
here are
we
all
want
our
to go
numbers
public
and everything.
Correct. And I believe there's a 2-week time frame that you have to start your market. You're allowed to market, and a roadshow is a marketing period.
Got it.
And the marketing periods are very sensitive during a public offering. You have to say things within a certain box because you're not supposed to give one shareholder information that you're not giving another shareholder. So the roadshow starts to start, I believe, within a couple of weeks after filing the final S1. Remember, Instacart filed a private S1 a year and a half ago, which left it the option at any time to make it effective and then start a roadshow, but they didn't do that till recently. The price of the shares is left blank. Okay. So what's happening now is the investment bankers have organized meetings with the management team.
Got it.
And the big investors, Fidelity, Vanguard, the mutual funds who buy big stakes in companies.
Yeah.
And they get a management presentation and they get to ask questions of the management team and basically sort of think if they like the management team, if they like the strategy, and so on. And that period could be a week to 2 weeks. Part of the gamesmanship of this, though, Harry, is you put out in the press that, oh, this is only going to be worth $9 billion, down from $49 billion. And so that you get into the roadshow and you end up at 10 or 11 and people are like, oh my God, this is a great success. So we're in the setting expectations low phase of the public offering process. And then you go through these meetings, and sometimes it's a 10-on-1 meeting, sometimes they're one-on-one, but they're typically bigger
meetings. And this
meetings.
would be CEO or management, executives, folks like that.
Yeah, with mutual fund managers. Yeah,
right.
CEO, CFO typically at a minimum, maybe one other exec from the company. And then the heads of the mutual funds, someone who runs the Fidelity Consumer Products Mutual Fund that has $30 billion to invest, and they're looking at, do I invest $200 million in Instacart or not?
Yeah.
So they're doing all those kinds of meetings, and then after the meeting, the banker says to the investor, "Do you want to have an allocation?" And they say, "Yes, no, maybe." And they add up all the allocations, and then when you hear the word oversubscribed, that means Instacart was going to sell 500 million. And they've got commitments for $2 billion. Now, there's a little bit of gamesmanship there too, because you never get your allocation. So every investor asks for more than they really want. So when you hear something's oversubscribed, it's kind of oversubscribed, but everyone pumps their request up because they know they're not going to get it. But basically, the strength of that book, they call it supply demand. Then they price it. Then they say, okay, let's put the price up a little bit. They have a big pricing call the night before they ring the bell, and then it's all done and they ring the bell the next day. So, and sometimes they cut the roadshow off earlier. Like, we were going to do 2 weeks, but we have so much demand, we stopped after 5 days. So that's my guess is what we'll see next week.
Interesting. So it does sound like there's quite a bit of posturing when it comes to the supply and demand, the price, and maybe even cut it a few days early. You probably should go a few more days, but you cut it early to kind of, maybe that gives you a little leverage when you go to do the price. What's the goal in the roadshow for Instacart, for example? Like, what would be like a slam dunk win? Like, oh my God, this was an amazing outcome for us as a company, executives, et cetera.
Yeah. Well, two different things. So number one, the company wants to beat expectations from what's out there in the press. And given the share prices that they proactively reduced for employees over the last year and a half down to 9 billion, they want to show a little bit upswing from that, right? They want to show that we got the price right. And now,
so that would be a little bit of an upswing in the share price.
Yes, right? Correct. Share price and valuation. Correct.
And valuation.
Yes. So that's number one. Number two, they want the investors who actually buy the stock to be big, reputable funds that can buy more, because most of these funds don't sell and they're stable.
Got it.
And as they get more and more convinced of the company's strategy, they buy more, which means there's less trading of the stock, which means the price is likely to go higher, right? So the supply of shares goes down if these big holders hold it. Part of the problem with all these companies that went SPAC'd is that big institutional shareholders never bought them. So they're just being traded by traders. There's no stability.
A lot of volatility.
Yeah, a lot of volatility. So what the CEO and management team want is they want an uptick in valuation and price, their share price, relative to what expectations are. And they want great, stable holders of the stock to buy over time. That would be considered a success.
Okay. And if there are a bunch of great stable holders, does that bring a lot of others in, or is it more just we've got some good big names and that's the main goal?
It brings others in over time, for sure. It's sort of like Sequoia invested in my round. Wow, then 10 people are going to look at it. I think
makes sense.
You get big institutional shareholders. It gains the attention of every other institutional shareholder as well.
Got it. And so in order to achieve that outcome, put yourself in Fiji's shoes for a second, and what do you think she needs to do or say to kind of, sort of have that best outcome?
She needs to address the growth problem.
Okay.
Excite on the potential for advertising beyond what we're already seeing today. Talk about the things that they haven't even scratched the surface on in ads that can get someone excited about how this is not just going to look like this from a growth standpoint, it's going to look like that.
Yeah.
And I think those are the two broad things. Underneath growth, there's the categories we talked about, sort of price, inventory, maybe international. And then under advertising, it's like all the different things they could do there. And it's sort of that simple, right? You don't have to talk about self-driving car, all the the stuff where some robots are gonna like go into the supermarket and deliver you stuff and cook you dinner at home with all the ingredients, right? I don't think you have to go all the way there to make this a success for the management team.
Well, you're an investor, Emil. Will or would you be buying these shares at IPO?
If I can get them at 9 billion, for sure. I mean, the profit alone at 9 billion valuation.
Yeah.
That's like 20 times next year's.
Yeah. I mean, they're a profitable company right now, right?
Yeah, it's profitable. So if you just believe any one of these things, in terms of the revenue will keep growing, the advertising will keep growing, even if growth on that top line remains low. Yeah, I think it's a more valuable company than 9 billion. So if I get those shares, I would.
Yeah. And I mean, you mentioned, the sort of pitch, I think, obviously with Fiji's background, coming from Facebook, and she was brought in, with this whole advertising ethos and experience and touting that. So I think she's the perfect person to pitch that. Do you have any thoughts on like the CEO change from Apurva to Fiji? I mean, I guess this was back in July 2021. I don't know how well either of the two, but I mean, and obviously the valuation, there have been quite a few other macro factors, but like you said, they were $39 billion value. Now it's kind of like this $9 billion IPO target. So there's sort of like big CEO change at kind of a weird time before the company IPOs, and then obviously a huge drop in valuation.
Yeah, I don't know Fiji, but I know Apurva. I think he is a fantastic entrepreneur. If you look at that GMV curve that I put in my tweet, it's extraordinary. At 90% of that was his, right? That was under his watch. Even the advertising business was mostly under his watch as well. So he invented both things. And I think, I really think he's great. I think he's just an inventor. He's probably off inventing his next thing. But I always have a bias toward founder-led companies, as you know. We're seeing at Flexport, the founder came back.
Yeah.
I think that Apurva did his fantastic job building this company. I hope and believe Fiji will sort of take it forward, but it's just these companies get less inventive when they're not founder-led. It's just how it is, right?
Yeah. What do you think about that drop in valuation? I mean, obviously, 39 to 9 billion, like that's bad, but I mean, what impact do you think that have, or, it is what it is, shit happens.
I mean, I guess it's an example of, it's the first large example we have of a company that got marked that high and now is going to go public that low. That being said, the investors who invested at 39 billion were sophisticated, some of the most sophisticated investors in the world. I'm sure they made money on tons of other deals, and maybe they're not going to on this. That's just them at the breaks, right? I think it's actually good for public market investors, the small guy, to get a chance to get in at this valuation.
Yeah.
Right. I'm not promoting the stock. I'm just saying usually the gains in these big private companies go to the venture capitalists. In this case, this company is going to be valued properly. And if you believe in the growth story, the normal investor will have access to it in a way that they normally don't.
Got it. And I mean, so I guess specifically like maybe some late stage investors in Instacart, obviously if they invested at 20, 30, 40 billion and now it's IPOing closer to 9, they lost some money. It happens. Like you said, I definitely don't feel bad for them, probably very sophisticated investors. I mean, I guess the other, so it's like, I think it's like a very it's like a newsworthy headline, right? Like, oh my God, this company had this huge drop in valuation. But to me, I sort of think about like, let's peel the onion. Like, what does that actually mean? Okay, with the late stage investors, maybe I guess the only other thing I can think of is like employees, right? If they came in, with share price or RSUs or something, that were priced higher. And I know Instacart has done some repricing, or maybe, is that typically what they do if,
Yeah, so I think, so for the investor class, usually nothing happens. They just get, it depends on the structure of their investment. Usually when you IPO, if you invested $100 million at 39 billion and it's 1/4 the price, well, your shares will be worth 25 million at IPO. You could decide to hold them or not. There are some deals where the investor will say, well, I don't care what you IPO at, I want my 100 million back. And it's called a ratchet. And Instacart does not have those. So the investors are definitely with the best at top. For employees, the early employees are still going to make money because depending on how early you are, you're fine.
They'll probably make a lot of money if they were early,
right? So the ones who got RSUs granted on the basis of a $40 billion valuation, I believe Fiji refreshed them based on the new valuations, so that they sort of hit their target compensation. And frankly, they've done a good job of that, because stock-based comp, which is one of the other financial line items you see that are weird, like very large at Uber and Lyft and some of these places, are actually quite modest at Instacart. So whatever they've done to manage that seems to have gone pretty well.
Very cool. Well, I really appreciate you coming on and chatting Instacart for close to an hour. And it'll be exciting to see these guys go public. And, we'll see what the share price and how the stock and growth of the business does in the future. Anything else you want to mention before we leave?
No, I think it's great. I think this is the last big tech company that was started in the post-financial crisis era.
Yeah.
Uber, Airbnb, Lyft, Dropbox, to go public, a big one in consumer. So I think it's pretty exciting that they did that. I have a lot of respect for what Apurva and the founders built, and I think there's a lot of there. But it's going to require some real work and innovation to get there.
No, I think that's a good adjective. It is exciting. So we'll stay tuned and we'll talk again soon. Thank you, Emil.
All right, see you. Bye.
Bye.